Hello, everyone. This is Jose Palomino again, CEO of ValueProp and creator of the Revenue Throughput System. And today's edition of the Revenue Throughput podcast has a special guest. He's Mark Feffer, veteran business owner and currently the founder and executive editor of the HCM Technology Report, the leading source of news for the human capital management software or technology marketplace. In short, they cover the business of HR technology. Now, Mark's aim is to keep readers ahead of trends by exploring technical developments, user behaviors, and organizational changes that impact their technology, strategies, product development, and the financial performances of both customers and vendors. HCM's audience includes not only chief human resource officers, VPs of HR, and directors of HR, but the entire C-suite, as well as senior IT, purchasing, and HR professionals. And great news, Mark just sold the HCM Technology Report to Recruiting Daily, another industry website, and he's now executive editor there. And so it is with great pleasure that I welcome Mark Feffer to our podcast. Well, hello, Mark Feffer. How are you?
Hi, Jose. I'm good. Thanks for having me.
Oh, no, our pleasure. Absolutely. And as I mentioned at the introduction, you've recently experienced what a lot of business owners look forward to today, when they can actually build up something of value and sell it to somebody else and then still get to play with it.
Yep. It's really a great deal that I fell into here. The HCM Technology Report was acquired by Recruiting Daily. It's a larger industry media site. And all I have to do now is be the editor of both sites. I don't have to do sales anymore. I don't have to do admin anymore. I get to, focus on the part of the job that I really like. So it's worked out great.
No, well, congratulations. It's going to happen to a nicer guy. I really am happy for you, sincerely. Well, Mark, just to give some context to our listeners, let's just start with a basic question. Like, who do you typically work with? I mean, I know that I read out the different audiences and so on, but like, what kinds of companies, who do you serve?
The common thread of the people that I serve with the HCM Technology Report are leaders and executives who are somehow concerned about HCM technology. They might be employers who are buying the systems, or they might be executives and directors of people who are building the systems. So it's a pretty wide net, in that respect, even though the industry itself is relatively small.
Now, it's interesting because when you talk about like HR software and things like that, I mean, there's, like SAP has been around forever, PeopleSoft's been around forever. Is there still a lot of new things happening in that space?
A remarkable amount, a really surprising amount. First of all, there's a huge ecosystem of companies globally who are doing something in the space around HR technology. I saw one count that said 5,000 companies are active. And the work that they do keeps getting more sophisticated. The HR solutions providers really are one of the first groups to really dive into artificial intelligence and machine learning several years ago, to use that for strategic purposes, and now sort of filtering down into lower levels and lower tiers, I guess you'd say, of the workforce and the tools that they've been given to use. The other thing right now is it's a really interesting transition going on, where the line between HR technology and general work technology is getting blurred. A lot of companies look on something like Microsoft Teams or Slack, which are really collaboration packages. They're looking at those as gateways to their HR systems now. So it's actually a very interesting time.
So it kind of begs the question a little bit from my perspective, because I work mostly with, and most of our listeners would be owners of businesses. So generally they're not mega enterprises. When you hear about like HR technologies, you, at least to me, comes to mind, well, your Time Warner or your GE or something like that. Is that technology finding its way into smaller companies? Like you mentioned Slack. I've seen some small companies, 30-person staffs use Slack extensively, for example. So where do you see the trend lines there? And why should somebody who owns a business with, let's say, a staff of 30, 40, 50 people care about any of this?
Well, I think the bottom line is they should care about it because it helps them run their business. If you're using QuickBooks, you're using HR technology because it's handling your payroll, for example. You might be using some application to keep track of your scheduling, to keep track of performance review notes or what have you. HR and workforce problems are no different than any other kind of business challenges, where today, especially, technology is basically a part of how you get things done, whether it's tracking, days off or paying your accounts payable or paying your payroll. Technology is somehow wrapped into how you run your business today, in I think almost every case.
So if I looked at, let's just look at HCM, right? What you created, and that still exists. It's just under another umbrella right now.
Yeah. Mm-hmm.
So if I look at its value prop, what kind of problem would somebody, an executive, whether it's a big company, chief HR officer, or if it's just the president of an owner-led business, what kind of challenges would make them say, gee, I should visit this site and I should actually see what would they be, what would that inflection point sound or look like where they need to start getting smarter about HR technology?
Well, I'm not sure if there's a particular inflection point that's predictable, say. I think different people have different levels of interest in technology and how to apply technology to their business. So there may come a point where they're starting to add employees or adding a certain number of employees, going beyond a certain threshold, where they decide they want to pay more attention to what's going on in the space. I don't think you have to be a big business, obviously. Even though if you're a small business, you're probably more concerned about dollars than you are if you're with a large business. So I think it's kind of a moving target based on the individual, based on their business, based on their industry, and what they're trying to accomplish, and what they're worrying about, what the problem is they need solved. The other thing that I should mention also, though, is we're sponsor supported. We're not subscription supported, which means that we do business, meaning get money from companies like UKG, companies like ADP, who want to get their message out to decision makers in the industry, and often on both sides of the aisle, as it were.
Okay.
They've got a marketing issue. They want to raise their image, raise their reputation, share their thought leadership, and that's our business model, is providing them with a way to satisfy those needs.
So that's interesting, right? So you hit on something I think can apply to a lot of people listening to this right now, which is the straight line view of something is I make something of value to audience X. I make audience X pay me for it, whatever that is. And yet you came up with a different model that says, well, yes, audience X is the primary beneficiary of all this content, information, knowledge, etc. But it's actually audience Y that wants to communicate to them, that is willing to pay the freight. And there's less number of them that you have to deal with them, because you don't need as many sponsors as you would need subscribers, for example,
right,
to make that purchase decision. So, you think about the application of just that principle, which is a business model principle, to say, what are you doing? And I'm thinking of anyone listening who's running a professional service firm of any kind, to think about maybe looking at their environment, their ecosystem, to use that term. Like, who are the other players that would actually want to pay for access to their audience, or pay to increase the value of what's being delivered, right? So those are fascinating thoughts. And it sounds like you've really figured that out early, as I recall, and you went with that model and that worked for you. So that's fantastic.
Yeah, and it is in a lot of ways the typical media model, the same kind of model that the Wall Street Journal or CNBC, follows. That they're building an audience, so that they can charge companies for access to that audience. That's really what a newspaper, Wall Street Journal, New York Times, they're not making that much money on subscriptions, but they're making an awful lot of money on advertising. And it's a similar kind of thing with the HCM Technology Report, which is essentially a trade journal.
Right. But you think about it from a model, and I love, me, I'm a strategy wonk, so I love to think about it from a strategic point of view. So you look at Walmart, right? Walmart is the world's largest consignment operation, right? They don't buy anything; they pay on scan. So as a result, what they've done is they built a physical platform to attract a physical audience. In other words, they're going to attract millions of people to their stores, and for the privilege of having your products on their shelves, you either pay a slotting fee, or you pay a slotting fee plus, basically some obviously some very severely, I'm sure, I imagine, very, very hard, very rigorously negotiated price for the unit. And then you only get paid when somebody actually buys it. So in some ways, even a physical model like Walmart figured out a way to say, no, it's about the audience.
Right.
It's about the audience. So just thinking about that, and I think of even some smaller companies that say, well, what if I brought somebody we buy material from, brought them to the table, brought our audience to them? What's the point of leverage? So that's really the thought, is you figured out, like you said, it's a classic media model, but it has application in a lot of places.
Right.
So, one of the things I want to just dig in with you a little bit, Mark, is putting back your hat on as a business owner, and you've owned other businesses before and you've transitioned them before. So I'm going to just address it from that point of view. If you looked out over the next 3 years, just talking to an audience of business owners as an owner, what do you see as the biggest challenges owners are going to face in the next 3 years? I'm not asking you to do like stock picks, but just a sense as a business person, like if I had a good friend who was wanting to get into business or was in business, what would I share with them? Is like, I think these are the things you're going to have to watch out for in the next 3 years that are significant, either challenges or opportunities, candidly.
Well, I think one thing is it's still going to be an unsettled time for the next year or two. So I would proceed slowly with any major change that I was going to do, because we think we're all getting vaccinated right now. We think that the virus is sort of beginning to wind down, however long that might take, but we don't know. There's still a lot of unknowns here, and it could surge. It could, any number of things could happen. So I think you need to remain flexible in your planning and ask a lot of questions and run a lot of scenarios to make sure you know what you're doing at any one particular point. I think one of the opportunities that everyone has right now is businesses are thinking differently than they've ever thought before. And I mean companies of all sizes. Even very conservative business people that I've talked to are more open-minded than they used to be. Remember a year ago, remote work was unusual, and there was still an awful lot of executives who didn't believe that it was a viable way of getting work done. I don't think anybody can really make that argument, anymore. Remote working does in fact work. It can boost profitability. So I think there's a lot of open-mindedness, even as there's a lot of uncertainty. That could be an interesting combination, because if you can find something to take advantage of the uncertainty, you may get a more open hearing than you ever would have gotten before.
But would you agree as well, though, Mark, that, for example, I see, you read articles of people giving up their leases and saying, we're all going remote. It worked and we're doing that. So, but it's really a short experiment. Like 1 year does not prove that it's going to work, that it's sustainable, like as a model. It may be for some, but it won't be for everyone. There's certain things that I'm even hearing now that are lost in terms of corporate culture development. You have people being hired by Zoom, only ever working on Zoom, and you kind of lose some of that connection that you get just being in an office. So I'm not like pro office or anti office. I'm just saying, reading into today and extrapolating that and saying that's going to be the same for the next 3 years. I think also you're saying, like, take it slowly, because it may not that big change may not stick quite the way you think, and there might be some unintended consequences of all of this as well. And now those are HR issues. I mean, ultimately, it's about people, right? Like, how do you keep people happy? How do you keep people engaged, and so on?
And what they're talking about now in terms of HR is what they're calling hybrid work, which is not remote work 5 days a week. You might work at home 3 days a week and go into the office in two. And what you actually find at the office is different than it has been before, that the office would be really used for meetings, meetings, retreats, that kind of thing. I do think that there's a lot of reasons why people are going to like the idea of hybrid work and stick with it. Childcare issues, family care issues, all of these kind of things. Being more flexible in how we approach work, it can help be part of the solution for those challenges.
People are a lot more tolerant too. Like, I've been on, I can't tell you how many calls, and all of a sudden I see like a child shows up, and like that would have been like horrifying for people. And I'm not saying people should just be like, chill about the whole thing and not try to be professional, but no one's wearing a tie anymore. I think tie sales, I mean, outside of occasional, like going out for dinner or something, if anyone's going out to dinner,
right.
Even that. So who knows? Don't invest in tie stocks. I'm just kidding. But, I don't know. But it seems like the formality, like I'm actually happy and I like to visualize that everyone I'm talking to on Zoom is in fact wearing pants. I mean, that's about as rigorous as I want to be on it. They may not be wearing shoes, but they're going to wear pants.
I've been on interviews and conference calls with, pretty high level executives, Fortune 500 CEOs. And there was one time when a dog started barking in the background and everybody froze. And the executive kind of sheepishly looked at his camera and was like, sorry. It was his dog. And you realize that this has all been a really great equalizer in a lot of ways, because everybody's having to deal with this. Everybody's got kids walking in on them. Everybody's got their dogs barking or their cat like jumping onto their keyboard in the middle of a call. I mean, you see all of this stuff happen when you're on Zoom all day.
Although there is definitely Zoom fatigue too, as well.
Oh yeah. Yeah, and one of the things that surprised me is in the whole debate about hybrid work, an awful lot of employees want to get back to the office, not 5 days a week, but being at home 5 days a week is not a great blessing. They're finding it's a lot of work. It's very challenging. If they have kids in school and they're supposed to be teaching them at the same time, it's almost madness. So I think all of those things are going to impact the way business gets done over the next 3 or 4 years. And if the people who are going to do well are the people who can like spot what's coming out of that dynamic.
Wow. Yeah, and let's just face it. I mean, if you were a company like, I guess, May 10th of 2020 that made like plexiglass shields, business was okay.
Yeah.
But like by May 18th, it was off the hook, and it was amazing, right? So we just don't, you just don't know. It can happen that quickly.
Yeah, I this is really a great case study of that, because if you look at 2020, before March 15th and after March 15th, they're different worlds. It's completely different worlds.
Kind of reminded me a bit of how 9/11 shifted things, but this was even bigger, because it directly bigger in the sense, I'm not saying I lived through that. I lived in New York at the time, but every human on the planet is affected equally on this, which is really a unique event. It isn't something you read about that happened somewhere else that you may feel bad about. This is stuff that everybody got rocked by this, and it really had a pervasive thing. So again, just thinking about businesses, and I'm thinking about these small businesses who had to make some significant adaptations. But most, again, that's part of being like an owner, being an entrepreneur, is the adaptations has to be in your portfolio. The ability to zig while the market's zagging, or else you're out of business otherwise.
Yeah, and I think that the thing a lot of entrepreneurs have to, be careful about is that. Sorry, Lynn's here. She just dropped off a cappuccino in front of me, so I'm like, ooh, man.
Case in point, man. This
Right.
is great.
I assume you'll edit that out. Even if you work by yourself, one man band, it's hard to be flexible sometimes, especially when you're the business and every decision you make directly impacts the business and your cash flow and your billing and all of that. It's really easy to get sort of paralyzed and know you need to make a change, but the change isn't tested because you're a one person operation, so you don't really have the luxury of testing. And you got to pivot, and you just got to hope that it's going to work, because you really don't know until you try.
Wow.
And
I think just one very last question I wanted to ask you about, Mark, as it relates to HR and technology, and I think as it particularly relates to some smaller companies, is the whole outsourcing trend, whether it's Upwork or Fiverr and so on, people taking advantage of more and more international talent where necessary, but not just international. Do you see that as something that, let's say in the mid to lower tier, being just continue to expand, especially now that we're all virtual? It really doesn't matter anymore that I have to find somebody. If I find a great copywriter who lives in Colorado Springs and I'm in Philadelphia, it used to matter because I wanted everyone to come into the office. Now it doesn't matter anymore.
I do think those are going to expand. I wonder whether or not there's going to be some speed bumps along the way, because Upwork, Fiverr, any of those marketplaces for freelancers, they don't pay very well. I mean, actually, they pay very badly. And I hear people talk about, getting a business identity package done, for $1,000. And it's very difficult for me to imagine that they got really good work for $1,000. If they did, the person who charged them $1,000 isn't going to be able to build a sustainable business himself or herself, because it's just too low a rate. So those marketplaces kind of concern me, because they give a lot of businesses good alternatives to getting stuff done they wouldn't otherwise be able to get done. But on the other hand, I can see a time where those marketplaces run into some shoal waters themselves, because the really talented people can't afford to use them. They're not going to do business through them. They're not going to find their customers through them.
Right.
I think that's something that you should think about.
Okay, no, that's great. Great insight. Well, Mark, we're at the end of our time, and I just really want to thank you for taking the time here, for sharing some insights from your business background. And also, I think one takeaway I'm taking from here is that, like, HR technology, I used to think of it as a big company thing, but when you put it down to ground and said, you have QuickBooks, you're running payroll, you have an HR technology system. And I gotta believe the entrepreneurs, you said there's 5,000 companies roughly in this technology space, which might be a small niche by some standards, but that tells me there's a lot of ideation, a lot of creativity going into that space, and it's going to find its way down market as well.
ADP just launched a product that allows you to run payroll with a 3-word command in as a text. Just run my payroll, and it runs your payroll. It's a really impressive product. It's very sophisticated technically, very simple to use. But that's an example of a really large company building a very sophisticated product for very small businesses. They're not offering that capability right now to their enterprise customers.
Gotcha.
So you've got that kind of dynamic going on. The small business is a big market, and vendors in any kind of technology, not just HR technology, are very interested in it.
Right. Well, that's a great takeaway. So for anyone listening here thinking about this area of HR technology, Mark, where should they go to find out more about what you do, and how can they? And you said it's free, so that's
it's
even
free.
better.
They can go take a look at HCM Technology Report.com or recruitingdaily.com.
Okay, and we'll have that in our show notes as well as live links, but just want to make sure that for those who might be jogging and listening, they can remember that. So Mark Feffer, once more, thank you for being part of the Revenue Throughput podcast. Really appreciate it.
Great to be here, Jose. Thank you.
All right. No, you're welcome. Take care.
Bye.